Okay, what an interesting week in the markets it's been. It's nearly the start of another month, and it's been exciting times. There's been a lot of expectation around the dollar potentially topping. Bitcoin's gone fucking nowhere, which is part of the course it seems now for Bitcoin. And we've seen some sort of, potentially the beginnings of some recoveries in anti-dollar assets, and stocks being included amongst that. So here's the weekly euro dollar. The euro, of course the eurozone, looking spectacularly fucked. German manufacturing is collapsing. I mean, Germany, France, Italy, I suppose. The core of the EU, the core of the euro. Germany especially, so we've seen the positive divergences coming in, we've seen the breakout, if you like, this weekly triangle. But it doesn't mean necessarily there's going to be an enormous trend reversal against the dollar, because why would there be? Fundamentally, why would there be? If, you know, it could be that this is all the bad news priced in, but if the collapse of the German economy leaves you still with, you know, this is the low here, you're still at 95, nearly 96% of the value of $1. Is a collapsed economy for the most central, most important part of the valuation of the euro not going to take it down a bit lower than that, maybe? Who knows? Who knows? We came up, we tested the 14 band, we retreated back underneath it, we took out this high, we came up to this pivot here, this horizontal pivot here, and there we go. Yeah, I think this would be this pivot here would be good enough for me. I think over, I'll be tempted to buy, under I'll be tempted to sell, but I'm not really into the euro. This is just, it's one of the main global assets, isn't it? It's just, you got to look at it. Stocks have had a good week. You could see, we go to the weekly, if it'll load. Ooh, it doesn't want to load. What have I done to my internet connection? I don't think I've done anything. Oh dear. Let's see. Oh. Is it loading? Is it loading? Oh dear, this doesn't usually happen. I don't think I can be bothered to edit it out. There we go. Weekly, hooray. Yeah, very clear momentum divergence, including on the momentum of price volume trend. Straight into this sort of middle set of tram lines that have contained price lows and spikes and accumulation areas before. They'll spike down a bit further, but yeah, we're above the 14s, we're above the band here, the moving average here. And, whoops, that's what I meant to do. It has a sort of a bullish look to it. It has a good look to it. There may be a pullback. This could be a 1-2, in which case you want to see it hold above 36.50, 36.40 area. We look at the NIAD, we look at the internals and the breadth, and you can see we had a momentum divergence on the lows here. I think I pointed this out. Well, in a video I never got around to uploading, haha. And then we're closed above the 14, momentum cross, it all looks good. Night hasn't taken out this high here, price has taken out this high here, but Night hasn't taken out this high here. So, that's a slight worry, but we're in bullish territory. Similarly here, big divergence on the momentum, higher low, higher low, higher low, as price was making double bottom on Rinia, and again we're working our way back up potentially into either a reversal zone or a transition to bull zone. NAHL, the last time we had a little bump above the zero line was here, and that was just one day. Here we managed a couple of days, and the time before that was here and then here. Each time it coincided with, well, here it didn't concern us with anything. That was a tiny high that then had that tiny low. Here was a high that led to these lows. Here was this sort of head and shoulders setup here that went down to these lows. Here the highs were here. Here the highs were here. And we've gone back under the zero line, but not by much. And you can see at the price lows, we're making our second lower low. Our first lower low here, our second lower low. I can't wave a mouse around straight here, but price was already going up. So we've seen a waning, a transitioning. And we also saw that here. If you look, positive divergence, pop. Same again here, positive divergence, pop in price, positive divergence. This would tell me there's probably a bit more pop in price if it is just a bear market rally, or whether it's a rally, whether we're transitioning to rally time. Especially if the dollar's going to start sinking, the value of stocks relative to the dollar, even if stocks aren't in good condition, will go up. Yeah, perfect bounce down, fail at the mid zone here on the percentage of the S&P 500 stocks above their 50-day moving average. Again, you can see the divergence here, double bottom in price, much higher low on the breadth indicator, plus the transition in momentum, clear crossover. So presumptively still bullish. Again, that's still, but again, we're below the zero line technically, but it's like, I'm going to say presumptively bullish, taking into account the whole picture. Specs is the candles, high yield debt is the line. You can see that high yield made a higher low while Specs was making a lower low, and they've moved up nicely together. No signs of negative there, nothing negative there really to focus on. S&P equal weighted discretionary ratio with S&P equal weighted consumer staples. You can see that it didn't make a new low with the S&P, which is bullish, but now it's struggling. Discretionary is struggling. We saw Amazon tank, we saw Apple tank. So is this just a relief rally? Well, does it really matter? You buy till you stop buying, you sell till you stop selling. But that was not a good day in that ratio. Staples, kind of like defensives, I guess, advancing over, or losing less perhaps, than discretionary. So it's bullish till it's not. Daily, you can see quite clearly the divergences on these lows. Big spike that got eaten right up, and then we've sort of crossed over the 14 band, we crossed over the 5 band, we've held above the 33 level here, crossed the 14s, testing, we tested the 14s, big bounce up. The next challenge area is going to be these important VWAPs. Again, presumptively we're in buy mode. You could make the case for a sort of long-winded positive reversal here. There's no negative divergence here yet though. There's this sort of area up here in these highs that we've just sort of nearly breached into, coinciding with this VWAP. I don't know. On a lower time frame, 30 minutes, I mean, it's not a good buying opportunity down here, is it? Down here was, you know. Well, this is just, I mean, where you're supposed to buy, unless you're going to go down to the 5 minute. And then I suppose you look for, like here, negative reversal, positive reversal, even positive reversal, double bottom. And you're sort of looking at your indicator and saying, well, every time there's a negative reversal or a pattern breakout, I'll buy. On a really, really, really low time frame, if you've got the well, if you're around to watch it, if you're around to watch the markets that closely, you can. I'm usually not. I'm usually at work having a job. And every time I've tried trading on my phone, it's been disastrous. Here's the dollar on the daily. Let's zoom out. Monthly. Yeah. Spiking around these monthly levels here. Really long-winded negative divergence, but that's so long-winded. But this whole, it has come up into, this was the last up move before the big down move from 20 years ago. So key area. The dollar was higher in the 1980s, but the world was very different in the 1980s. Think about how much more backwards most of the world economies were. I suppose this was when people thought Japan was going to be the next big challenge to the USA. It's ridiculous in hindsight. Here, the Eurozone was taking off. Is Europe going to be the next big competitor? No. And then there's the rise of China. But each time, basically, the USA's been in a slightly worse position in terms of global domination, I suppose. But everywhere else is in such shit shop condition. And we've just been talking about Europe. Maybe we'll keep going. And this is the big pivot here on the monthly. Weekly, clear divergences. I mean, can we make a wedge? Can we make a sort of a wedging action out of this? Ooh, look where we stopped. Ooh, that's good. Get rid of that. Or is it more of a channel? Oh, look at that back test thing. If we make it like a channel. Ooh, that's good. That's good. What's this? What time frame is that? That's a monthly. I mean, I'd like to get rid of some of these lines just so it's less busy and less crowded. But I mean, So yeah, we're at a key support. Channel and horizontal. Here's key resistance on the weekly. I'll be tempted to, if I have any more lines on the daily, I'd be really tempted to delete them. Yeah, delete all. We'll delete everything on the daily for all the difference that makes. And there it is in close up. Bounce and drop under these wicks here and into this support here would be the next sort of area you're looking for. 106, 105. Or 106, 107. It all depends, doesn't it? It all depends. Let's do some close on daily. Come on. On daily close. Come on. There we go. I'm not massively convinced. Let's do it on wicks. Close enough. It's not perfect. Yeah, your mum's not perfect. Yeah, potentially. Let's go with that. Let's change that to a different colour. What have we not got? We've not got orange. Let's have orange. So I delete everything off the daily because I don't like the clutter, and then I immediately put something new back on the daily. So I'm going to say, what's my decision line? Go to the hourly, why not? Why not? There we go. Rolling over on this double top. More downside, please. I would very much like that. We've got lines on the 6 hours, we can probably get rid of those. You can tell it's been a while. Get rid of those. So it's this that's fueling, I suppose, the move up in stocks, commodities potentially. If we have a look at, well, I mean, the correct place to buy uranium was here, but I've been again occupied with my silver trading, which has sort of been alright. I finished the last month flat, which makes a change from finishing it down. Haha. And I mean, what can you say? We're in the 14 support band. We're above the 50. We crossed over here short term. Yeah, I wouldn't want to see it go a whole lot lower. If uranium's going to go, it'd be good for it to go now, or keep going rather. The weekly. Yeah, I mean we're under. This is the big time resistance from. Well, if I pulled up a high time frame chart, you'd see, and we see we're in this sort of sort of a wedge type thing. But it needs to break up and out, because otherwise, if it starts failing, we'll come down to test the low of this channel, and then we'll potentially come and test sort of the lows in this choppy head and shoulders zone down here. So you'd want to see it on the weekly maintain above. That seems like a perfectly decent pivot to me. That seems like a perfectly decent pivot to me. Oh, I don't know. Split the difference. Aren't we massively enthusiastic? Let's have a look at the hourly. Yeah, I mean, you could try go long. Hopefully this low would hold. Yeah, it all depends what the dollar's doing. Hopefully that low would hold. I might put my, we're challenging the 14 band on the hourly. We've come into this bottom. They're trying to make it a top. If they succeed, they'll take out this low. If they don't, this low will hold and will go up. So if I was going to buy, fair enough, it's not ideal, but yeah, somewhere down here. You'd have to be stopped out somewhere down here. Anyway, silver. Not a great look to it. It's this. Is this a bear flag? Is this a bear flag? We've got this little bounce here that looks sort of, quite nice. Well, we've got this sort of rolling over look now, and if we can't get above, let's actually go there. 1959, 1960. Then silver might go down more. Again, that would be with the dollar's got to go a lot higher potentially. Because this looks like a bear flag to me. It's got that look to it. Can we interpret this in any other way? What if we do this? Ooh, that's kind of ugly look to it. Can we make it look like it's sort of, not really, but maybe sort of? Not sure. It's weak. It could be a head, left shoulder, right shoulder, in which case we're going down. Silver's going down. Which of course is what silver does, it goes down. Came all the way back to the starting gate here in terms of price. Sort of maybe that's the fun. Maybe this here was the fun, and now it's back to shit. I am long silver though. I am long silver. Testing the 14 band, we got over it. If we can stay above it, otherwise it's not looking good. On the 30 it looks better. We have this divergence here in this horizontal support, on this trendline support, but I got in long round here. So yeah, it needs to make a move pronto to look a bit better than it does. Semiconductor looks alright. Crude. Actually, while we're on the topic of silver, so GDX junior gold miners against gold. Are people investing in the future of the metal? Well, we're above the 14 still. We had an up candle. Real rates, or the inverse of real rates rather. We're seeing some consolidation. We've crossed over the 14, little up candle. So, that still looks like a bear flag, doesn't it? It's not a good look. Based on this and this, it could negate this sort of ugly look in silver. It's all about these holding. Silver against stocks fell. Silver against gold. Still above the 14. We bounced at the 0 line here on momentum. So, and of course the yen. Let's zoom in a little bit. 9 months. So the yen against the dollar. If the yen is going to be moving up as sort of the ultimate anti-dollar asset, then silver and everything else that's anti-dollar should sort of follow it. And we had a little bump, just like we had our bump in silver, and then, well, TBD, to be determined. We got on to crude. We're above the 14, we're above the halfway mark on RSI, we're above the 14, we've had transition over the moving average. On the momentum of price volume trends, this was the fake out of the channel, and we've come out of the channel again. So his second time the charm, his second time going to be more bullish. Here's the 30 minute, again there's that divergence just like we saw in silver, and this would have been a good long and we've moved up since. In terms of crude, it actually fell against stocks. The dollar Canadian ratio against crude, where basically if it's above the moving average, do you want to be selling crude? If it's below the moving average, do you want to be buying crude? We're below the moving average. But of course, we come down and nick just underneath it all the time, and that's just a high that maybe you should have sold. So last time, 1, 2, 3 times. So maybe this is a high that should be sold, or we follow our rules and we say, well, you know, if we're below, if we're below, and it's below both of them, and momentum has turned, then we're buying crude, which again will be supportive of other anti-dollar assets like silver going up, ExxonMobil, the stock against crude oil. Crude is not outperforming, stocks are outperforming, ExxonMobil stock is outperforming. Here's the high yield chart all by itself. You'll notice it came down to the 70.7 long term Fibonacci retracement, and we put in a stonking great big, well, the positive divergences started all the way back here, made sort of a triangle thing, and it broke out here on the 17th of October. Ooh, my birthday. Sort of. We're above the 14, we're above the 5, we're above the 14. Potentially coming into this resistance area. Weekly. Oh, that's much more definitive. Look at that. That's much more clear. Yeah, I'd be a lot happier about saying there's maybe some more long-term juice in that. And also stocks. Bonds. Oof. Well. Negative reversal in bonds, maybe? Oh dear, that doesn't bode very well, does it? Because if it goes back down again, that would imply more rising rates. When we're going up again. So maybe that wouldn't be good for silver or anything like that. Ooh, next week's going to be an interesting week. I'm sort of umming and ahhing. I'm leaning... well, everything up against the dollar is my lean, clearly. But it all depends on the fucking dollar, doesn't it? It's just a single most important asset, you know, right now. Bitcoin. Look at this ugly price action. All summer. Into the autumn now. So ugly. I mean, it's bad enough losing money when prices moving rapidly down, but this kind of thing here, ooh, you could lose money in that chop so badly. And look at these spikes. Look at these spikes. These neither rhyme nor reason. So it's all a bit ambiguous, but I'm leaning long everything that's not the dollar, I think is the summary. And it'll be very easy to be proven right or wrong. We just trade it and see what happens.